Kevin Warsh's recent appointment as chair of the U.S. Federal Reserve has shifted the focus of institutional scrutiny to monetary policy. This development is being closely followed by both crypto markets and traditional finance, as they await signals about a potential shift in the Fed's stance. The incoming leadership inherits a complex mandate: managing inflation, maintaining central bank independence, and balancing growth support with liquidity management. These policy choices could ripple through the crypto ecosystem, influencing everything from liquidity to regulatory expectations. While some market commentators expect the Fed to continue tightening, others argue for rate cuts in 2026. The split in expectations reflects broader uncertainty about the economic outlook and the Fed's ability to balance competing priorities. Analysts like Lawrence Lepard suggest that Warsh may cut rates, citing AI productivity gains and trimmed inflation as justifications. This view is supported by recent data from the Wall Street Journal, which could signal a more accommodative policy approach. Warsh's leadership comes at a time when the crypto industry is particularly sensitive to macroeconomic signals. Interest rate decisions affect risk. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Appetite, capital flows, and the regulatory climate for crypto firms. As such, the Fed's stance is not just a matter of monetary policy. It's a factor in how crypto exchanges, banks, and firms operate globally. A shift in policy could influence licensing requirements, AML/KYC obligations, and cross-border operations, all of which are critical for the sector's growth. The political backdrop adds another layer of complexity. During Warsh's swearing-in ceremony, President Donald Trump emphasized the importance of economic growth and framed the debt challenge as solvable through expansionary measures. This signals a potential tilt toward looser monetary conditions, which could influence market expectations and the regulatory environment. Analysts are now watching how this political stance interacts with the Fed's independence and its ability to manage inflation without compromising economic stability. For crypto investors and traders, the stakes are clear. A more accommodative Fed policy could boost risk assets, including crypto, by increasing liquidity and lowering borrowing costs. Conversely, continued tightening could weigh on market sentiment and slow down adoption. The challenge lies in predicting the tempo of policy shifts and their cascading effects on the crypto ecosystem. Despite the speculation, uncertainty remains high. The Fed's decision-making process is influenced by a range of data points, and the path forward is not yet clear. Market participants are closely monitoring inflation metrics, employment data, and geopolitical developments for clues about the Fed's next move. The interplay between these factors and war. The next signal to watch is the Fed's upcoming policy meetings and the statements accompanying them. These will provide insight into whether Warsh is leaning toward rate cuts or maintaining. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A tightening bias. Additionally, any regulatory changes or statements from the White House regarding economic growth could further influence market expectations. In summary, Kevin Warsh's chairmanship marks a pivotal moment for Fed policy and its impact on crypto markets. The debate over rate cuts versus tightening is ongoing, and the outcome will depend on a range of economic indicators and political signals. Investors and analysts are closely watching how these dynamics unfold, as they could determine the trajectory of both traditional and crypto financial systems in the months ahead.